Hello and good morning. I welcome you to the morning meeting today on Thursday, the 25th of January 2018. I'm sorry. Yeah, this is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers. We want to have a look at the market opening on the day of the ECB. I think it will be a very interesting, a very fascinating day. And somehow I have the feeling that there's plenty of volatility ahead of us. I mean, mainly depending on what Draghi will deliver, especially at the press conference, since there's no big surprise to be expected in terms of yields and a rate hike or something like that. No question about it. So there won't be any changes so far. But the thing which will be really interesting will be to hear what Draghi has to say about this development in the Euro USD here, which went to a very absurd move yesterday, but it wasn't intended by, or it wasn't driven by euro strength, but it was US dollar weakness. Stephen Mnuchin, they current what's his name? I'm sorry. This guy is the, one second, it's the finance minister. No, it's not the finance minister, right? It's the I kind of forgot what this guy what's his position. 1 second, please. I just forgot what's the position. So it's the finance minister, right? But I can Google it here, right here. 1 sec. So one sec. Yes, so he's the finance minister. Sure, he's the finance minister. I was thinking about something else, to be honest, but okay, doesn't matter. The thing is that Mnuchin himself here said that yesterday he considers a weak US dollar necessary, let's say. So it wasn't that obvious in the statement, but it was a statement which became clear if you could read between the lines. And today he underlined this once again, and then said on the World Economic Forum here in Davos, he said that his position might slightly differ from other finance ministers here of the past. And in fact, so far, a strong US dollar was always something which was considered to be good for the US economy. Right now, this position has slightly changed, let's say, which is in fact no big surprise after the big bull run here into the election and after the election of Donald Trump in November 2016. The US dollar took a dive, and this is no big deal, no big surprise, based on the fact that the Trump administration, with the America First and Make America Great Again and bringing jobs back to the US and focus here on the export side, that, I mean, you need a weak currency. And so the US dollar being under pressure, it's not such a big surprise that the White House is considering a weaker US dollar to be something positive here. And obviously, based on those comments from Mnuchin, I think we can say that obviously the message which was delivered here makes it quite clear, underlines exactly that. And so now the thing is, we should really start to wonder, why is this developing? And I think in the near term, midterm, probably in the upcoming months, I think the US economy could definitely drop into a recession here. That was also already something which could have been seen once you look at the flattening of the yield curve in the US. We mentioned this several times in the morning meeting, and this is the thing, it's also becoming clear that this process could accelerate itself. So the drop in the US dollar is probably let's say they at least try to somehow reduce the negative impact here on the economy, which such developments in the markets which we can currently see here has. So what I'm talking about is very easy. Let's have a look here at the 10-year yields, for example. So this push higher in yields, it could become a trouble, or it could become a problem, especially in terms of the margin debt here. In the at the NYSE. So the NYSE leverage is at a very elevated high level, all-time high in fact. So if we Google for NYSE leverage, you will see that here such a development, especially probably based on the Chinese stepping back from buying US treasury notes, for example, or also T-bonds and all that stuff, that here a rise in yields could definitely cause some trouble in the equity market. So far everything looks fine, since market is heading higher, aggressively heading higher, also probably based on the tax reform which passed the Senate here in December already. But the thing is that rather sooner or later this could come to a quite brutal end if yields keep on rising, and if something like risk aversion then also hits the market, and risk off mode is coming into play. We have not just this development in yields, but we also have developments in the commodity markets which could cause some trouble. If you see oil prices rising, all in all, I mean, it's not the worst thing to see oil rising again, especially after this crash we have seen here into the year 2015, respectively 16, with this huge drop and trading as low as 26 USD per barrel. But, and this is the thing, so oil prices rising to a level could have negative consequences for the economy itself. And with all these factors, if you combine them, there is definitely, you can definitely feel some fear, or see some fear, let's say, which could be, or where the White House, respectively now the U.S. Finance Minister, probably tries to counterbalance this with such a quite aggressive down talking he used yesterday in the US dollar. So what has all this to do with today's ECB decision? I think a lot, because if you look here at the euro, a second, by the way, I have to look something up here. Okay, so if you look here at these developments in the euro, you can see that the euro pushed aggressively higher, and it wasn't because of euro strength, but it's more US dollar weakness. So with the US dollar being so weak and euro trading at the highest levels since December 2014, we have to say that it's definitely a problem of several ECB officials. So ECB doesn't want the euro to be so strong. Instead, they see their inflation target, which is 2% here, definitely, or they see they have trouble to reach this inflation target if the euro keeps on strengthening like that. And with this in mind, I have to say that probably it makes definitely the most sense to think of Draghi today as someone who will also try to somehow down talk the euro. The only problem he has is there's not so much room for down talking the euro, since the monetary policy and the path of the monetary policy of the upcoming months is already set from the ECB. They will keep on buying bonds till September 2018, worth 30 billion per month, and then let's see from there where all this will develop, let's say. So Draghi could definitely come out and talk about yields staying low well beyond the end of those asset purchases, for example. He could come out with something like making sure that people understand, that investors, market participants understand that here the euro, I'm sorry, not the euro, that those asset purchases could continue well after September 2018 also, depending on how the economy develops, depending on how far the ECB comes, or how near, let's say, how near they come to their inflation target. He could also be quite aggressive in his speech around the euro itself, talking about negative impacts the euro exchange rate might have, or not might have, but have on the on reaching this inflation target. So all this combined could definitely be something which is mentioned from Draghi today, and I think he will do lots not lots of it, but let's say he will definitely try to somehow down talk the euro, find ways to somehow really get the exchange rate down. Even though it's not sad that he will be successful with that. And yeah, so with this in mind, on one hand, I have to say I really expect Draghi to try to come out dovish, and probably he will succeed. But the question is, how successful will he be, and how deep could the euro then fall, or respectively, how aggressively can he down talk the euro here before it turns around again? The question is, will we make it below 123? So probably won't even make it below that level, but just stabilize at an elevated level, and then with the next push lower in the US dollar, euro keeps on driving higher because of US dollar weakness. So probably he's capable of pushing the euro as low as 121. But the thing is, what he needs to come out with is nothing which is just a short-term solution and pushing the euro, let's say, for 3, 4, 5 days, 1 week, 2 weeks, whatever, lower. But he needs to make sure that over several months the euro will stabilize, I'd say, significantly below 120. And so we can really, it's somehow really exciting to see what the ECB will deliver here. Definitely. I definitely think that they will come up with something like that, even though I wouldn't bet on it right now, but wait for the ECB to come out, since we know that there were several occasions in the past where Draghi really failed to down talk the euro, even though he planned to do so. So some might remember here the developments which took place here in June last year. That was here in Sintra, right? It was, just have to look up. It was in Portugal, but I have to. Yeah, it was Sintra, exactly. And he failed to down talk the euro there, but the euro instead took off from here and pushed in the afterwards here till the end of August to 121, reversed from there, and then took off here again against the region of 115. So the thing is that Draghi has definitely lots of work to do today, and we should be really excited to see how it works. I myself have to say I really expect him to come out dovish, to at least try to come out dovish, and if he really succeeds in the first place here and can down talk the euro today, which is probably very interesting for intraday traders, then first targets should be found here somewhere around 123 probably. And if he's really successful, even though I don't want to formulate any trading setups against those highs, the thing is that this should drive the DAX higher from here. So what you can see is that yesterday there has this push lower, which was mainly, first of all, due to the euro strength, but especially due to the US dollar strength, which pushed us down something like 300 points. And the DAX couldn't withstand this pressure here, even though it started to bounce back a little. We made lower lows here yesterday, and now today we have to see if Draghi again comes out dovish and is capable of pushing the euro lower. This could then lead to some DAX strength, which could result in making back most of the losses here from yesterday, and if possible, with making it back above 13,450 points here, there's further room than on the upside, which into the weekly close could probably, and if the US markets can stabilize, could probably push us as high as 13,600 points. So all in all, currently on the hourly chart, I'm definitely bullish for the DAX, at least as long as we trade above 13,130, 13,150 points, and would expect another push towards these levels. Intraday, again, 450 is the level to watch. If Draghi comes out dovish, then this should definitely be it should be possible to break this level. And yeah, again, from there, it's probably then achievable, the region around 13,600 points in the upcoming days. Nevertheless, we depend on the developments in the US equity market. So what we can definitely see again is the market being really extended on the upside and a potential bearish divergence forming here. So meaning nothing more than the market is probably definitely losing some of its momentum here. So we highly depend on how US markets will present themselves. If the US markets can push higher, or at least overcome this short push lower yesterday, as they were capable of overcoming it last week, Tuesday. I'm sorry. Also, and if we can make it back above these highs here around 390, 400 points, so 26,390, 26,400, this is definitely something which would then make it possible for a positive weekly close in the DAX, even though, again, first of all, it's Draghi's term. If Draghi succeeds in down talking the euro, this could push the DAX higher. But then we depend in the hour after this, we highly depend on what the US equity markets will deliver, and if they really can push higher and make new all-time highs. If not, and if the market fails to break those highs, but instead probably not just pushes towards these levels here around 26,100, but also pushes below them, I think there could be further problems ahead, which could then also be negative for the European equities here. But right now, I'm still positive. Let's say I'm still positive, and yeah, probably will make it above 13,400 points already before the ECB. Nevertheless, it doesn't change anything in terms of the overall picture here. Let's have a look here at dollar Japanese yen. Also very interesting. Aggressive push lower. I think we are not yet done, even though I'd appreciate a push back towards 110.20, 110.20 region around further lows here, which not further lows. What's the word for this? Former, that's the word, and further, former lows here, 100, 110.20. This is a potential short trigger from which I could imagine dollar Japanese yen to tank again and probably again attack the region then here, not only around those lows from tonight, but also push lower towards the region around 107.50 here. With this in mind, and still being a little skeptical if this is really sustainable, what we get to see in the US equity markets here, I'm still very, very careful in terms of long engagements in my seasonal Canadian dollar Japanese yen position. I still want to wait for CAT JPY making it back above 89.60 here. This would be a potential and positive sign, in my opinion, then for another push higher. But so far, there's no intention from the bulls here to attack this level. Let's have a look at gold, probably also very interesting. We pushed higher yesterday already and pushed towards and also above the highs here from 2017. So currently, again, we're very extended. If the US dollar can stabilize, I'd watch the region around 1,340, 345 here, against which we could definitely consider, again, long engagements in gold. The picture would look a little more difficult for the bulls if we push back below 1,325 USD per ounce. So far, the overall mode is definitely bullish. Against 340, again, 340, 345. We could consider long engagement with a target above 1,400 points, even though we have a clear defined stop at 1,325 here, and should be really careful with long engagements below that level, even though so far it doesn't look as if we get to see such a huge reversal, especially because we know that the US dollar is positively correlated to the US dollar, and US dollar is very, very weak. And these comments from Mnuchin, they are not really positive for the US dollar at all. Probably we can rather sooner or later probably stabilize at least a little, but I don't think that we will easily overcome this structure of falling highs and falling lows. I think it's more likely that the US dollar has some further room, probably with a first projected target somewhere here around this channel line on the downside. which we could then aim for, I don't know, 86.50, depending on when we drop into this region here. And yeah, so in fact, that's it from my end. I hope you enjoyed the morning meeting, and I wish you happy trading. Watch your stops. Talk to you again then tomorrow, 10:30 a.m. GMT. I definitely look forward to it, and that's it from my end. So have a nice day. Take care. See you tomorrow. I look forward to it, and bye-bye.